Everything is about to change. The way we work, the way we invest, even the way we build wealth. AI and robotics are advancing faster than anyone predicted, and if you're not paying attention, you might miss the biggest financial shift of our lifetime. Will AI create mass unemployment, or will it open doors to the greatest investment opportunities we've ever seen? What will happen to stocks, real estate, and Bitcoin? Will the S&P 500 skyrocket or crash? And most importantly, will financial freedom become easier or harder to achieve? Today we've got Michael Rosmer, the Offshore Citizen himself, breaking down the best investment strategies for the coming decade. Stick around until the end, where he'll reveal exactly how he's investing for the future. Let's dive in.
Well, so what are you bullish on if you look at the, you would say, normal investment vehicles like, stock markets, bond markets, commodities, crypto? Giving that kind of scenario you believe in terms of AI and robotics, what do you think in the next 2 decades will do well, and what do you think will do poorly?
So I think in general, the S&P 500 is going to continue to do well. And part of the reason is I think there's like a very simple thing that people kind of overlook about this, which is the SEC makes it hard to take companies public. And what that means is as you have an expansion of capital within society, and I don't think money printing is going away at all. I think these governments are going to print more and more than they have. Every 10 years, the debt of the U.S. doubles. It's going to keep doubling. You're going to have 70 billion in debt, not 35 billion in debt. It doesn't matter whether Republicans are in or Democrats are in. They're going to just keep printing money. This is going to happen, I think, highly, highly likely. And so then the question is, where does that money go? And the problem is that there's a relatively small number of companies that individuals can invest in. And so a disproportionate amount of money gets funneled into a relatively small number of companies, and that pushes those companies up more relative to the market or relative to the supply of money than otherwise. And so I think that will probably continue to do well. I think Bitcoin is accretive. I think people will probably continue to do well in Bitcoin over the next 10 plus years. I'm not necessarily bullish on Bitcoin 50 years out. I think there's security problems. There's a bunch of this sort of thing. But I think in the next 10 plus years, it's a very strong religion. And so it's a little bit like betting on the Catholic Church in 1100 AD or something like that. You probably are gonna do well there. And then I think that there are specific areas where you can get into like small business investments that I think you can do very well. And I think those are like probably like the number of places where you will need to invest a very small amount of money because of AI. Like you'll have the 10x programmers, right? So instead of having to hire a team of 20 people, you'll hire a team of 3 people, and they'll be able to build a product that makes the same amount of money as before is really great. And so as a result, there's going to be some disproportionate payoffs if you can find those opportunities. So I would say those. And then there's also things along that line that are just very, like, they're just not going to go away. Like somebody is going to ultimately going to keep doing the same things. I've been buying logistics companies lately, and it's like last mile delivery sort of thing. Okay, fast forward when you get self-driving, you actually probably are better off because you reduce a major part of your cost. So that's advantageous. And people are not. I think that the pace of a lot of things is going to increase. There was a guy on Twitter who posted this thing about what he called Jobageddon, where he talked about mass unemployment from AI. I'm not a believer of this, because I think what happens is that if AI is good enough to take your job, then you don't need to be that intelligent or that trained in order to use AI to create opportunities. And so I think that the number of opportunities that come out of that are really high. And I think this is abnormal. If you listen to Andrew Yang, he talked about how there was this problem with retraining people. People have their job displaced because of the fact that there's automation, and they've had a factory job for the last however long period of time. They're in a situation where they're 50 years old and just retraining is not happening. And really, okay, well, that was true when they had to do a sophisticated retraining. But when retraining is, hey, let me talk to an AI agent that's really smart, and that AI agent can go and solve a whole bunch of stuff for me, and I can just learn to be a director of those AI agents, I think that creates enormous new opportunities that we just have no vision on what those are going to be.
Do you think there's a risk that a UBI will kind of be a populist vehicle for some political parties? Because I can imagine a lot of people grabbing onto the UBI idea, saying, this sounds really nice. I have to do nothing and I get a check every month. I want to vote for the people who will guarantee me a UBI.
So I think there's two sides to that. So the first of all, the question is like, where's the money going to come from to pay for the UBI? Like if you just sit down and run the budget, the amount of money that you would have to spend is outrageously high. Now, okay, modern money theory, technically a government that prints its own currency, it can print an unlimited amount of currency, so financially it can afford it. Sure, but the distortive effects of that are obscenely high. And so I just don't think that, I don't think there's many societies where they can afford to do it, I guess is what I would say. Like if you look at someplace like UAE, they basically already have UBI. Okay, like you have a relatively small percentage of the population. They only have to give benefits to those people. And so they can afford to give them a lot because 90% of the population are expats. All right, like that's a workable model, but it's not a workable model at scale. And so can the US do it? I don't think the US can do it. I just like, where's the money going to come from? The second thing is, okay, great. Where are the real goods and services coming from? Which is actually what you care about, right? You actually don't really care about the money. You care about real goods and services. So real goods and services are being produced by somebody somewhere or something somewhere. Who owns the stuff that is going and producing those real goods and services? Unless you're saying, okay, we, the government, are going to seize the means of production and we're going to run the means of production for the benefit of the people, which is kind of like, a communist utopia, then that I just don't like, okay, it seems like you're probably going to end up in a situation where a relatively small share of people are going to own the means of production and you're going to have this value accrue to them. And if you're not going to pay them accordingly, they're just not going to provide the services to you. And then what? It's you have some sort of an issue. And I think that increasingly that will be true where all of the like real asset, like think about a simple example, Starlink. Okay. Starlink, super valuable system. It's awesome. Great. Well, Denmark can't be like, hey, we're going to force SpaceX to provide Starlink to our people. You can't do that. It's not a Danish company. So hence, you have to somehow pay them money, but you have to somehow get the resources to actually pay them in kind. And so I think absolutely, it is 100% it is highly, highly likely that there will be people who will be motivated by the story of UBI. I think like that is probably the case. I just don't see how they can practically implement it in a way that is going to be functional at even like a moderate level. I think you just kind of implode your system very, very quickly. Do you have like a different model for how you think it could come about?
Yeah, so I agree. I also did the numbers on is UBI possible, and it's only possible if you have that extraordinary growth of like 10% plus a year for a couple of decades, right? Then maybe you could do it. So I'm also more and more thinking that AI will not take all jobs away, but I am concerned for a certain type of individual who maybe does not have an entrepreneurial bone in themselves and are very reluctant to reschooling. So I do see some people kind of getting stuck and who would kind of demand, a form of UBI saying, this is made impossible for us. We cannot pivot our development. We need the state to take care of us. But then again, I'm kind of thinking we already kind of have that in Denmark. But if you put the Danish or Swedish welfare or German welfare system on steroids, what would that mean? That would probably mean like even higher taxes, and then you will have this negative circle that I don't think is viable. I guess I still to some extent believe in a society where certain goods are less costly. Maybe not in 1, but in 2 decades where you're kind of 3D building houses where...
What would be some of the things that you think would be most likely to have lower costs going forward? What would be some of those product areas?
So I'm thinking transportation, right? With autonomous vehicles. And I'm also thinking food prices could start to go down with like vertical farming, for example. Clothes prices have been on the decline for many, many years, so I'm guessing that will continue. I think a big question is house prices. I think attractive locations will not be cheaper. I'm thinking maybe less attractive locations where you can maybe 3D print or have modular houses that you can, put up less costly. So I think kind of a basic way of life that's not luxurious, but on the other hand is not bad, could be cheaper than it is now.
So food, you would see. So I guess, like, to me, if I think about food, so I agree with you a lot on transportation. I just think that the offset on transportation is going to be people will just move lots more stuff. So I think it'll be like, okay, you'll move 50 times as much stuff, but the cost will be lower per item of movement. That would be kind of my initial thought on transportation costs. Obviously, you remove the labor part of it, it drops the cost dramatically, right? And then realistically, you can probably get more efficient systems through electric vehicles as opposed to internal combustion. And so, you can probably drop the cost of power through some sort of alternative power generation. And so I can see cost of transportation going down fairly meaningfully, actually. Cost of food, I guess, like, what are the major input costs that you're going to have? So mainly you have energy, I guess, as like the significant input cost. What do you see as sort of the change in makeup of the grid and the adjustments in energy over the next couple decades?
Yeah, so I think the big if here is if we get nuclear fusion, right? So the only other one is of course solar that is becoming really cheap, but I understand there's a challenge with actually storing and transporting the energy from solar, right? So I think either we get that major boost from nuclear fusion, and of course also just like in general nuclear energy seems to be very safe and very efficient, and more so. But again, I'm afraid that Europe will be stuck in the middle, not really taking advantage of the new technologies, robotics, AI, nuclear. So I'm thinking that it will be, Europe will get stuck between a rock and a hard place, not growing because they're not taking advantage, and then having a population that might increasingly saying, okay, but we're still getting unemployed due to competition from the US and China. So that is kind of how I'm seeing it play out. I'm also thinking that we will maybe not see drastic deflation, but kind of a zero inflation environment. And I'm thinking that governments will print money like we saw it before, and interest rates will go to zero. But that's kind of the scenario I have in my head for the next kind of 15 years.
So what do you think the timeline might be on fusion?
They always say it's 20 years away, right?
Yeah, that's the kind of joke, right? Although now they're saying in the 2030s. Like, I've heard some fairly credible people kind of suggesting 2035 or something. So then it's only 10 years away.
Yeah, I'm actually going to interview an expert on that next week.
Yeah.
And also kind of the person I'm doing this podcast together with, Lars Tvede, who will come in and comment on, for example, this discussion. Is also very much an expert. So I think they're all kind of bullish, but whether we are talking 5 or 10 years, it's a really good question. But that's the game changer, right? When we're talking energy.
Yeah, I guess I'm always skeptical because they haven't actually made fusion work, right? So there's all this talk about, there's lots of fusion startups now. There's lots of interesting things going on there. They're claiming all this progress. But at the end of the day, nobody actually has fusion really working, where it's producing meaningful output energy. And so it's the same thing I was mentioning before. Like, you just don't know what problems exist until you get to those problems. And so I'm a little bit skeptical. And then the question is, okay, once you make it work, now how long to actually build out the infrastructure? And so conceivably, with all the permitting and things that you need in Europe, etc., this is like, it's got to take at least 5 years to put into place some sort of a fusion facility, I would guess. So yeah, I would tend to think that we will not see the benefits of fusion power until at least the 40s or 50s. That would be my my sort of minimum.
What are your thoughts on financial freedom? Like, how big a nest egg are you going to need in the future? Do you think it will be the same? I mean, I can't remember her name, but there's this American financial advisor who said like 2 million is nothing in dollars. You need 5 million plus just to sustain yourself and have financial freedom. I guess looking at cost increases in the US, maybe that might be true in some future. Or an alternative future could be that like $1 million is enough if you can migrate to a country with lower costs. But where do you see this moving? Do you need more or less or less?
So I think that the amount of the purchasing power of dollars is coming down and is going to continue to come down. I think that's probably pretty likely for the next while. So realistically, I don't think you will need less money in dollar terms than today. Now, the question is, what about in inflation adjusted dollar terms? And will you need more? I think that the way that most people live today, you will probably not need less. You will probably continue to need more. Or you will suffer a decrease in quality of life, which is, people can tolerate a decrease in quality of life. That's one option. Yes, people will have the ability to relocate to some other place and they can decrease their costs in that way. I think to me, like when I look at, okay, like where are the costs? Biggest cost for people is real estate for sure. I agree with you that certain high demand areas, the prices are probably going to be high. If you have demographic collapses, then you may find some places that are quite a bit cheaper. We see this in Japan and Italy as two prominent examples. Whether people are actually willing to go and live in those areas that are lower cost, that's a different conversation, because I've seen a lot of people living in downtown major cities who probably shouldn't have been affording to live there, but were unwilling to make that compromise. I don't think that the construction costs for most people are going to go down anytime soon, because I think you just have a lot of regulatory capture problems in there. I don't think it's like fundamentally a technology issue. I think it's a regulations issue. I think that real estate is an inherently monopolistic resource, and so that fundamentally drives up prices in high demand areas, and that accentuates when you have wealth inequality. And I think wealth inequality is basically a unstoppable train for the next couple decades. So I don't see that being addressed. So I think for people who are willing to move to the right places, yes, the actual cost of housing could go down, but for people who are not, less optimistic, which will drive people to move. I think that incentive structure probably will encourage people to go to some other parts of the world. I think people's cost of food, if you're willing to move to the right places, I mean, you can have indoor, you can grow food. There's like a bunch of different things you can do to reduce your cost of eating. I just don't think that most people are going to do that. I think that people tend to be social. People tend to live in cities. So I think that at scale, that's probably not going to be the case. I do kind of think there's a possibility of what I call satellite cities, which is this idea that people move to sort of the outskirts where it's lower cost, but they're still on the edge of a big city, so they can kind of get the benefit of that. And so that could happen. Transportation, I agree with you. Costs will come down. Cost of clothing is such a bizarre one because of the fact that you can both spend more money probably than you could ever spend on clothes, and less money than you could ever spend on clothes. And so it's very preferences driven, right? Like, what are people willing to tolerate? I think it's hard for me to imagine that the cost of clothing can get lower than what is coming out of China now with some of these, you buy it's just toss away things. Like, it's crazy, very bad quality, but that is what it is. Entertainment, I think, is already probably about as cheap as it's going to get. I mean, you have YouTube is basically free, so how is that going to change? Probably not too much. Insurance is a messed up one. Insurance costs seem to keep going up and probably will continue going up. I think there's some really bad adversarial dynamics in the structure of insurance. I'm quite bullish on the idea that you could reinvent insurance in some ways that are way better. let's see here. What other things would be? Education, I think, will come down quite a bit. Yeah. Healthcare, I'm not so bullish that it will. I think, like, unfortunately, we have a society that is increasingly unhealthy, and so I think that drives up the cost of healthcare. And I don't see, like, at this point in time, I don't see that reversing. I think that, like, a larger wallet share will probably go to healthcare, and it probably should to some extent. It's just a lot of it's dealing with chronic disease and deep-rooted problems that, like, you look at GLP-1s, right? Okay, so that's made some of the most valuable companies in the world now, and that's probably going to grow, but they're super expensive. It's not like it's a cheap thing. And I don't know that they don't have a lot of downstream negative effects. I suspect they probably do. And so, I think there's very, very cool stuff coming in the field of health. And there's incredible, like, where we probably can make the biggest difference is in health. I just don't know that we'll be able to get past the regulatory problems in a reasonable period of time. I think, like, fast forward 100 years, probably yes, but in the next 10 or 15 years, probably not.
But what about the nomads here? Because personally, I'm thinking differently about healthcare. So Cyprus has quite decent healthcare in terms of going to your doctor and if you have small issues, right? But I kind of made a plan together with my wife that, let's say something really serious happens and we get cancer or something like that.
Yep.
Then I look at where would we go, and I kind of identified maybe Istanbul in Turkey or maybe somewhere in Thailand to get kind of top-notch treatment, but at a budget. I think more people might consider healthcare that way, but I think it will take some time.
Yep. Yeah, I think the idea of being able to do, like, what do they call it, health tourism is a huge, huge thing. My question, I guess, is, so I would tend to agree with you for nomads. And I think that there's also a super interesting thing of regulatory arbitrage. Like, to what extent do you say, well, screw this, we have this really cutting edge health stuff, let's just bypass the regulatory apparatus that's in someplace like the US, and let's go to India and do this. I've seen this with stem cells, for example. A good friend of mine has MS, and he got back probably around like 12 years ago now or something. He had this experimental stem cell treatment and made a massive difference for him. It was super, super effective. But he couldn't do it in Canada, where he was from. He had to go to India to go and get it done. And so I do think there's, like, a big opportunity in there. I just think that some of these things, like, the amount of time they take to change turns out to be longer than what people... I have this quote I always throw out all the time, which is, for those who can see the future, the problem is it always appears closer than it is. And so I think that's it's easy to see, hey, listen, obviously this is going to come about. We're going to be able to apply AI to looking at cells, and we're going to be able to combine it with this thing here, and be able to go. It's like, yeah, we'll probably be able to do all those things. It just probably isn't going to happen in the next 5 years. Probably not going to happen in the next 10 years because of whatever. And so a lot of this stuff, it's one of the reasons why I think it's super important to be in a good financial position and take care of your health now, is that probably, 30 years from now, the things you and I will be able to take advantage of will be profound. And we have to get through to that point in time.
Yeah, I think there's a point too that you may need to go to another country as well, because, I mean, FDA, for example, in the US might slow some things down. So it could be that you have, like, cell treatments or treatments of the telomeres or the zombie cell treatment, for example. Most of those are coming up, like, from now till, in the next decade maybe, but they may not be available in all countries. So I think there'll be a lot of longevity tourism.
Yeah. Probably like a whole longevity tourism is probably a great thing to build a whole brand around, actually.
I'm pretty sure. I mean, that's kind of the other thing we discussed quite a lot on this podcast. And I had Aubrey de Grey. I had an interview with him. I don't know if you're familiar with him.
No.
So he is the one who invented the term longevity escape velocity, which basically means...
Oh, interesting.
Well, if you don't know exactly what it means that you become 1 year younger when a year passes. Actually more than that. So you start becoming younger, not older. And he says that will happen in in about 15 years. And of course, you have people who rubbishes it, and then you have other people like Ray Kurzweil who said, no, it will happen much sooner. We're almost there, right? So we're in such an interesting point in time where I think quite reasonable people have very different expectations on what is going to happen and the time frames.
Yeah, that's part of what makes it interesting.
Where do you see interest rates growing? Do you see them go back to close to zero?
I think that it's probably likely that they go down as opposed to up. It's an interesting thing because some very smart people, like just before I started talking to you, I was listening to some stuff from Jeffrey Gundlach. He's, a very smart guy, and he thinks that they're going up, not down. And so, I'm sort of contrarian in this regard. But yeah, I tend to believe that interest rates fundamentally are, I don't know that they're necessarily going to zero, but I think they're more likely to be lower than they are today in X number of years, 5 years or something like that, than they are today. I think that I just think it's very difficult for them to raise interest rates, and the incentives are going to be to have lower interest rates. I don't see a lot of incentive to raise interest rates the other way. I'm not a believer in the story that inflation is coming back in a big way. I don't see the drivers on that. I think probably the blueprint of Japan after 1990, where their interest rates went down and stayed down, and they basically couldn't get inflation back up. I think that's probably more likely to happen. The only thing that I can think of that would kind of throw that off, besides you could have a war or something like that, right? Okay, if you have a nuclear war, then everything that we're discussing here is out the window. But aside from that, you could say we could have massive demand for certain raw resources. And so if you had resources prices spiked for some reason, for example, big climate change initiatives where they say we need to electrify the whole society and we're going to put trillions of dollars into driving electrification. Okay, that could be inflationary, and it would be difficult to see otherwise. But I don't really know that that's actually going to happen. I think that there's going to be enough balance there, and that the negative consequence, at some point the economy will not be so positive, and they will try to fight it with cutting rates because that's what they do. And my belief is that we will probably have what I would call stably low rates over the next foreseeable future.
Okay, can we try and boil down our whole conversation to a bit of advice for you could say people who've saved up a bit of money but are concerned about kind of the future in terms of AGI or just advanced AI and robotics? What should they do? How should they position themselves? So we talked about real estate. Is that a good investment? Is the stock market, and should they go active or passive in the stock market? What are your what would be the advice you would give? We would say the lower segment of your clientele, so the ones with net worth of less than $2-3 million, on how to get through this potentially turbulent period of advanced AI and robotics.
Well, that's a very good question. Aside from financial for a second, you should probably learn to use the tools. That's the best way to predict the future is to create it. And so that's probably a good starting point. Just like probably traveling and checking out some other parts of the world is a good idea. See what other things are there. In terms of how to manage your money, I suspect that probably buying the S&P 500 and buying Bitcoin are probably two reasonable things to do with a fair amount of your portfolio. I would generally not try to trade it. I don't think that most people should be active, because I think that you need to understand active markets are a PvP game, and you're probably playing with more sophisticated players than you. And so you're likely to lose out relative to the other alternative. If you want to get like very sophisticated about it, there's private deals that you can learn to do. Like if you want to ask about real estate's a hyper-local asset, meaning that literally your neighborhood could go up and one not far from you could go down. It's also very asset specific. So I can find a great deal, and that doesn't mean the rest of the market is priced well. It could be that I just happen to talk to the right person at the right time. They need to get out. I can place a lowball offer. I can get it. Things like this. So I think the most important thing for people probably is to practice a degree of agency, focus on, figuring out how they can utilize these new tools to be useful, take the outputs of that and put it into, assets like the S&P 500, like Bitcoin. Those are probably like the two, if I think over like a long period of time, those are probably the two most solid assets that you are going to hold at this point. You can certainly diversify into some other assets if you want, but I wouldn't do that with the majority. I wouldn't gamble on buying the next meme stock or something that you think is gonna go up. If you want to do it with a very small amount of your money, great, scratch the itch or whatever. But I wouldn't do that. And then I think probably if it was me, I would try and figure out, are there ways that you can somehow arbitrage where you are to somewhere else? And so this might mean that you can move somewhere. It might mean you can hire people somewhere else. It might mean that you can find resources that you can purchase somewhere. It might mean you can get healthcare somewhere else. But I sometimes tell people, you don't get what you pay for, you get where you pay for. And so by leveraging that point, you can end up doing pretty well. And I don't think that is likely to change in the next few years. The last thing that I think is like super important that we kind of underemphasize in a lot of these is the importance of community. I think it's really, really important to build a community of people who are supportive and who you can be doing things together with. I think when things go badly, that is like your ultimate safety net. I think it's very, very bad to be in a situation where you don't have a supportive community. And I think that the value of community in a world where people are increasingly mobile physically, but also separated digitally, is going to become more and more important. One of the things we didn't talk about is sort of the rise of misinformation, AI terrorism type stuff, when you can have deep fakes, etc. Now you can no longer trust citizen journalists. What is going to be trustworthy? The people who you know, like the people you have an actual relationship with. And so I think that there will probably be an exponential value in personal relationships and community over the next 20 years. And you should probably invest heavily into building that.
Thank you. I think that's some good advice. What do you think about bonds? I'm guessing you're relatively bullish if you think interest rates will go down.
I was telling people to buy bonds when the interest rates were around 5%. I think the thing about it is you only benefit from bonds being bullish if you sell before you reach maturity, right? Otherwise, you just get paid the coupon. And I think it is hard to sit there and suggest that if you're getting a 4% coupon, that's really something to be excited about. So, yes, you could right now. Okay, our interest rates have been rising the last little bit, at least on the long end of the interest rate curve. And so a person could say, okay, great. If bonds are above 5% yield or something, I'll buy them. And because I'm happy to get my 5% coupon. And if it turns out it drops and the bond goes up, then great. I'm happy to sell. Otherwise, I'll hold to maturity. That's probably not a terrible idea. And you can do that with a portion of your portfolio. I think you should always be, liquid to some extent. And so you kind of want to have some degree of, whether it's cash or savings deposits or bonds or whatever, you should have an emergency fund. You should have some money around. And, but by and large, I think people will generally underperform, let's just say like Bitcoin and the S&P 500 by holding 5% bonds.
So after breaking down the impact of AI and robotics on the economy, one thing is clear. Efficiency will rise, but it won't happen overnight. Regulations, delays, and structural barriers will slow down full automation. That said, when it comes to investments, both Michael Rosmer and I remain bullish on key asset classes. We believe the S&P 500 and Bitcoin are positioned for strong performance in the coming years. While real estate offers stability, we're not as optimistic about its returns compared to stocks and crypto. As for bonds, with interest rates expected to drop and inflation staying low, they should do just fine. But ultimately, we still see the broader stock market, especially in the US, and Bitcoin outperforming bond returns. The future is changing fast, and staying ahead of the trends is what matters. If you want more deep dives into AI, investing, and the future of wealth, be sure to subscribe and stay tuned for the next episode. Let's see where the future takes us.